At the moment, there's a lot of government incentive for customers to buy and build new. So there's stamp duty exemptions, there's grants that they can get access to. So that, I suppose, is an advantage. My name's Steve Barlow, and I'm the General Manager of ClearState. We're a land subdivision business. We operate primarily in Sydney, and we specialise in developing fragmented parcels. We like to think that we can deliver a customer experience that's comparable to the big master plan communities that exist across Western Sydney.
Nice. So what I'm just curious about as well, you mentioned something about fragmented across Sydney. Now, this is something I'm not familiar with. I've actually not really understood and how that came about. Do you want to share with the audience what that means in just layman terms, perhaps?
Yeah, so when we say fragmented land, it's basically the way the existing land holding of Sydney is today. It's a consequence of the way Sydney's been developed over time, particularly subdivisions that occurred in the 50s and 60s. And it basically means there's a lot of 3 to 5 acre parcels that exist. They are in the growth centre, but they're not big enough for a big master plan community. They're sort of 50 lots in size at bite-sized chunks. So we specialise in buying those 5 acre parcels from the existing owner and developing those into communities. What's good about that from an investment perspective is that they're small enough such that it doesn't take a significant amount of capital to buy them. And if you can aggregate the adjoining parcels, then you can turn it into a particularly big project.
Yeah, big development site, fantastic. All right, yeah, that's really fascinating just to be able to hear that. And there's plenty of opportunity then because we have a lot of land, and I guess it's just a matter of being able to release that supply to the market, isn't it?
Yes.
Yeah. Okay.
Well, one of the other good things about fragmented subdivision is the bigger parcels typically are further away from the infrastructure. So a good example of that is some projects we've got in Rouse Hill, where the government invested heavily in the new metro line that will ultimately run through into the city. Great piece of infrastructure. And we've been able to get projects within walking distance of that metro station where a customer can come in and buy a freestanding house, but be within walking distance of this great piece of infrastructure. Typically, the bigger projects don't get that benefit. They're further away. So we like the fact that we can get in and deliver really efficient projects from an investment perspective, but give great amenity and outcome to the customers who ultimately buy them.
Yeah, I mean, I just recall because I drove past, and just correct me if I'm wrong. Is you guys have a parcel land down at Quakers Hill? Is that right?
One of our first projects was in Quakers Hill on Burdekin Road. Yes.
Yeah,
Yeah.
it used to be an egg farm or something like that.
Correct. So
Yeah.
we typically will buy the 5 acre parcels off a farmer of some sort, whether it be an egg farmer or a market gardener or something like that. And they've owned that land for business purposes.
Yeah.
It's happened to be rezoned. It's a good size and parcel for us to buy, and we end up transacting with that particular owner.
That's fascinating. Cool. Well, I'm really excited to hear a little bit more because this is the stuff it fascinates me as well, and I love getting into this type of things. But as you said, you need capital to be able to do this type of thing, and it's about speaking with the right people, joint venturing, and
Absolutely.
so forth. Okay. Well, let's share with the audience what you do currently day to day in your role as a general manager.
At the moment, I'm really focused on acquisition. So in any development business, you need a pipeline to be able to bring stock to market and ultimately deliver the projects. So we're heavily focused on trying to find new projects to buy. That's probably taking up 70% of my time. I've got a team that works with me that are also heavily focused on acquisitions. Outside of that, we've got a heavy customer focus and making sure we deliver on time for our customers and do what we say we're going to do. Obviously got a team that we're managing, and also we've got a capital partner out of New York that we also need to deal with and engage with. So I suppose my role is very diverse, but at the moment it's got a heavy acquisition focus.
Okay. Can you share with the audience what's involved in this acquisition process that you're currently doing, and what is those kind of day-to-day things that you need to do?
So a lot of vendor engagement. So once we've identified where we want to buy, which will typically be around key pieces of government infrastructure, so where they're investing in infrastructure that ultimately our customers value, where they're also well advanced in the planning process. We try to buy sites that are well advanced from a planning perspective. So once we've narrowed down those areas, then it becomes about which parcels do we like specifically. So we like to look for parcels that have good road layouts. We like to look for parcels that are relatively flat, are serviced from a utility perspective. So we then apply another set of filters, if you like, to narrow down the specific sites we'd like to look at. And then it becomes about engagement with those vendors, preparing a feasibility in which to put an offer forward, and then spending what tends to be a fair amount of time with those vendors, getting them to a point where they understand our offer, because sometimes some of the concepts we talk are a little bit foreign, and ultimately agreeing a price and term. So yeah, we spend a lot of time in the pre-feasibility phase identifying where we'd like to buy. We then do detailed feasibilities and detailed numbers to work out what we think we can pay, and then it becomes about vendor engagement.
Yeah, great. Well, I'm assuming some of the terms that vendors might not be familiar with be like joint venturing options and
absolutely. Yeah, I mean, it's pretty common when we look to buy under an option agreement purely to defer our stamp duty obligation, that not only vendors but their legal advisors think that we're taking an option that we can walk away from, which is not the case. We're committed to the option, and they have the ability to enforce that commitment, but they don't necessarily understand it. So sometimes it's just a lot about educating them on those concepts and how we're protecting their interest in the transaction.
Mm-hmm. I'm also just curious as well with regards to, say, the vendors. Are these usually vendors who don't know that they might be an opportunity to sell, or are they actually already advertising on the market?
A bit of both. A bit of both. We like to try and find off-market opportunities because, I mean, I suppose there's some costs during the transaction that you can naturally avoid, agents primarily. But typically where we operate, everyone's aware of what a range of value for their parcel is. They talk to their neighbours who might have sold, or someone down the road. So they're all pretty educated on what their land is worth. They've been educated through the rezoning process. So typically the rezoning process takes anywhere from 2 to 5 years, and they've been informed during that process. And then a lot of them, particularly in high demand locations, will see a lot of agent and developer activity, i.e. people trying to buy their land. So they become educated through just talking to people interested in acquiring their land.
Yeah, that's fantastic. All right, well, Steve, let's take a step back and get to know you a little bit more personally. And I want to just sort of delve into a little bit about your childhood, I guess. So firstly, let's start off with your story and share with the audience, where did you firstly grow up?
I grew up in the Blue Mountains on the outskirts of Sydney, which was a fantastic place to grow up. I stayed there till I was 25 or thereabouts, just after university. I did property economics at university. After that, I spent a couple of years in London, as a lot of Australians do, not doing much else but drinking, which was fun. And then I suppose got to the end of that period in my life, and I decided that I best get a job. I was always very fortunate in that I knew I wanted to do property in some way, shape, or form. It wasn't until during university that I decided property development was where I wanted to head specifically. And I was fortunate that when I got back from London, I landed a job at Mirvac.
Wow, that's amazing. That's a great story, actually, just to hear that. So growing up in the Blue Mountains, childhood, you went to primary school and high school there, and then did you move? Yeah. And what stage did you actually move into university? Actually, where did you go to university firstly?
Western Sydney, University of Western Sydney, as it's called.
Western
slightly
Sydney.
Different now.
We have Western Sydney. Yeah, it is still Western something.
The Quakers Hill campus, which I suppose gave me the ability to drive through parts of Western Sydney, which is where I'm developing now, which is quite interesting. All my schooling in the Blue Mountains. Yes.
Okay, so you pretty much drove from the Blue Mountains out to university during those days as well.
That's it.
How long would that trip have taken actually?
Half an hour.
Okay, so it's not that far now. I think about it.
No, I was at where I grew up was at the very bottom end of the Blue Mountains.
Okay.
So Penrith, almost, you could call it. Within a stone's throw of Penrith.
Yep, gotcha. Yeah, because we drove up to Blue Mountains actually on the weekend, funny enough, just to go out and have a look at the Sydney Railway again, because we've been there a number of times.
Yeah,
it's a good hour and a half drive, but that's further, obviously past Katoomba and so forth. So I was making that assumption there, because I'm thinking to drive into Sydney CBD, just even from Kellyville and Quakers Hill and peak hour traffic is about an hour and a half nowadays. So I guess, in comparison, it's not too bad.
Yep.
So that's really fascinating. You went to London. For how long did you stay in London for?
18 months or thereabouts.
Okay, so it's quite short.
Had a great time. I I really enjoyed it. I have fond memories of being over there. I did a little bit of real estate over there. I did some leasing of flats, which was very interesting. Getting to know London and driving around London was a great experience. Yeah, something I certainly look back on fondly.
Definitely. And was that straight after uni? Since you finished, you went straight over to London, or was that
Basically, yeah, within a couple of months, I was on a plane, first time overseas, which was daunting and exciting all at the same time.
Yeah.
And didn't do as much, I suppose, European travel as I'd planned. But London's a pretty interesting and diverse place, and you could get lost there for a long time. So that's basically what I did. And I, through the job I was doing, I was working weekends as well. So it probably narrowed down the time I had, but nonetheless, great experience.
Okay. So was that your intention when you went over to London to actually work a bit, or did you?
Yes.
Okay. So you actually got a job over there, and then as soon as you came back, then it's like perfect. You got into Mirvac. So what were you doing at Mirvac?
So I was in their development business, their greenfield subdivision business, located out in Parramatta, and I was fortunate that I had I sort of had two bosses, one of which just threw me in the deep end, which was a bit daunting because whilst you learn a lot at university, not all of it's practical.
Yeah.
So he threw me in the deep end, which was great. It sort of made me learn very, very quickly. And then I had another boss who was sort of a lot more, he had a coaching approach. So if I ever got stuck, I sort of had the best of both worlds. So I was very fortunate that I've landed that job with those two particular individuals. And that gave me a really good grounding into what property development really was about.
Wow. Is that common to actually have two bosses to report to in corporate? Because
no, they weren't. One was a formal line, if you like, if you think about it in an org structure sense. One was a formal line, and one was a dotted line, almost self-imposed. So this particular guy he sort of self-imposed himself on me, which was fine. Like he's one of the best operators I've had the benefit of working with, and I think his approach to sink or swim benefited me in the long run. So whilst it was a really daunting experience at the time, I look back with fond memories.
Yeah. So how long were you with Mirvac for?
2 years.
Okay, great.
2 years. And then the boss that I had the formal reporting line to got an offer from Stockland and dragged me across. So I ended up going to the dark side, if you like, which was a completely different business. I went from Mirvac Homes in Parramatta. It was a part of a corporate organisation, but it was almost, that particular division was almost run like a small business, which was great for me at the time. It was a good starting point into the big office in the city, in the head office of Stockland, a completely different culture and mindset. So that was, that took a bit of getting used to, but I ended up staying for almost 10 years. So.
Wow, that's fascinating. So within Stockland, what were you doing there?
So I started as a development manager, just running their projects in the Hunter Valley. So I had 3 or 4 projects up there of differing sizes and at differing points in their life cycle. And then ultimately I worked my way up to a regional manager role where I basically looked after their business in New South Wales from a greenfield land subdivision perspective.
So maybe just for listeners who might not really understand what greenfield means, let's sort of unpack that and explain what that involves.
So that's basically freestanding house land subdivision on the outskirts of any city, but in my case, Western Sydney. So it's where you can go and you can buy a piece of land and you can find a builder and build your house. They're all freestanding houses like you would see, as you would imagine, suburbia, I suppose. So that's what we would term greenfield, as opposed to brownfield, which was more centrally located within the CBD sort of ring, and is typically built form whereby you buy an apartment or you buy a dwelling that's already constructed.
Yeah, gotcha. It's really fascinating, and I'm pretty sure there's so many different things. And it sounds like your main expertise was in subdivisions.
Yes,
a lot of times. So maybe just to let the listeners understand and know, what were some of the things that you did in terms of subdivisions for these things? Because subdividing parcel lands, there's so many different ways you can look at it. What were some of your things that you did within that role?
I suppose I've been fortunate that I, particularly at Stockland, I was able to work my way up. So I started, I suppose, in the in the phase where we were constructing the subdivision. So as a developer, you put the roads and the services like sewer and water, etc. in. So I spent a lot of time understanding how the physical construction process worked. And then from there, I've done everything from the planning side of things. So working out what your DA is going to look like, whether you comply with the planning controls and the like, to rezonings, which is basically taking a concept plan and turning it into a precinct that can be developed, and then into acquisitions. So I suppose I've been fortunate to see all aspects of property development, from the very front end acquisition and statutory planning processes all the way through to the end product and customers moving into their homes. I've been very fortunate to see the whole process.
Wow. And now I can see why you stayed there for 10 years, because you did quite a broad range of things all the way through the whole process, which obviously...
And that's one of the good things about property. I think it's very tangible, in that the end result for my customer or the customer is that they're living in their dream home, which is pretty exciting to be part of. But it's also very diverse in the sense that we do things on site. So there's a tangible aspect to that, or element to that, where you've got construction activity, you deal with feasibilities and numbers, you deal with planning and engagement with local councils and advocacy with local councils. So you sort of need to be not a master at any one particular thing, but you need to have an understanding and grounding in each particular component. And that's one of the things that is really attractive about property, in my opinion.
Yeah, that's what I love about development. There's just so much that you can actually be part of that process. And it's great to be able to see from the planning stage all the way through to where your customer actually moves into the house, because there's so many cogs in the wheel. And at the end of the day, if you don't get the part at the beginning right, because that's obviously go through council and planning and so forth, then you're kind of pretty much stuck, and that's why it's so important to make it, right, especially to develop land that's going to be sustainable, but also to fit the needs of our customers. Because I'm pretty sure over the time you've seen the developments change, the block sizes have gone smaller and smaller.
Absolutely, yeah. I mean, when I first started, which was 15 years or so ago, 450 or 500 square metre lots was probably the norm. I remember I had a project that I looked after in Glenmore Park in Penrith, and we had an idea that we could deliver 300 square metre lots, which at the time was just unheard of, and everyone was, particularly the sales team, were very against it. We don't think we can sell this. Don't bother putting it on the market. They were very, very against the whole arrangement of 300 square metre lots. Anyway, in the end, we were able to get them, because of their reduction in size, to a price point that was very, very competitive and therefore more appealing to more customers. And we put them on the market on this particular weekend. I think we put 10 on the market. They all sold on the Saturday. And the sales team in the following sales meeting on Monday were screaming for more. So that was my first, I suppose, experience where the product itself changed significantly. And now 300 square metres is almost the most common product in Western Sydney. We're doing lots down to sort of 250 square metres, which is affordability driven in the main. So it's a good thing that we're able to deliver, I suppose, a price point where more people can get into home ownership.
Yeah, I think people don't realise the land size at the end of the day until they actually see it and actually think about it. Because when you think about down to 250 square meters is literally the house and just a very tiny bit of backyard space.
Yes.
And at the end of the day, if it's affordable, who cares? At the end of the day, as long as we can actually get our own home ownership, as you just mentioned as well too, which is quite important for a lot of us as well. But
I think the builders have done a great job too in that small lot product. Some of the designs they're coming out with now are so livable and use the space so efficiently that the value for money you get is really, really high. So whilst they're affordable, the quality of living, if you like, is exceptional.
And especially as well too, when people are quite busy, they've got work and so forth, they're not really caring so much about having too much space at the end of the day, because half the time they're not home. But in saying that, it's not true now with COVID. So I think it might happen around the other way, that people want more space now. So it depends. I'm just going to pause it.
No, I'm clear. I was at Stockland for 10 years.
Yeah, that's what I mean. I was just
sorry. My bad. So, sorry, mate. I get you.
10 years at Stockland. Then after that, what was the next part of your journey?
Well, I was happily employed at Stockland, having a good time doing what we were doing. We had some great projects that I'd been working on for a long time at that point. And through a mutual friend, I was introduced to, I suppose, my current boss, Dean Williamson, who owns ClearState, and he was keen for me to come and work for him. After 4 months of me saying no a few times, going back and forth, me saying no a few more times, he's a pretty convincing guy. In the end, I decided that coming across to work in a smaller private business would be good for my personal development. And it's probably always something that I had in the back of my mind that I would like to do one day. Probably came into my world sooner than I had anticipated, but nonetheless, the opportunity presented itself. And yeah, that was it. We agreed that I'd come and work for him, and I've been here for almost 4 years.
That's excellent. So tell us a little bit more about ClearState. ClearState, as you mentioned at the beginning of the show, that it is a business that acquires, a lot of greenfield and does a lot of subdivision. And you said that majority of the time that you spend is on acquisitions. What kind of target market or customer base do you actually is your I guess business predominantly targeting at this point in time?
Predominantly first home buyers and second home buyers. So we'll typically try and buy, like I said, projects that are well located in terms of proximity to amenity, because that's what customers value, which obviously makes our product easier to sell. So that's probably the first thing. And then secondly, we're able to buy projects where we can deliver affordable product, which naturally attracts the first home buyer and the second home buyer. So they're budget conscious typically, they're wanting value for money, and the projects we can buy can offer both of those things.
Okay, excellent. And what I would love to jump into next is talk a little bit more about your property journey, I guess. You've talked and shared a lot of great, interesting insight into what you've done in your development journey for both these great companies. Let's talk a little bit about your personal journey. Maybe firstly share with the audience, when you first purchased your own property as well.
So I purchased my first property off Stockland, actually. So I was working on a project in the Hunter Valley in Maitland, and I saw that we were delivering product where I suppose mum and dad investors were coming along after us and subdividing our lots into smaller lots. So I thought, well, I've got the skills to do that. So I went and did that, and I ended up cutting a 600 square metre lot into 300 square metre lots. I built one house, which I rented out. I didn't build the second house because financially I didn't quite have the capacity to do that at that point in time, and I ended up selling both of those. But it was a good experience in that it's the first time I'd put my own money into a property project, if you like, and it was interesting how that changes your mindset slightly, because it's all of a sudden your money, and that bill you've got to pay, you might actually ask the consultant to do a little bit cheaper, and you might push a little bit harder for certain things to happen quicker. So that was an interesting insight for me to understand how I would treat my own money versus how I thought I was treating the business's money that I worked for.
Yeah, that's fascinating. I know once you start putting your own money on the line, you start to think, how can I actually make better improvements? Is there probably a little bit more margin you can make? How can we actually ensure that it delivers on time? It's really a different mindset, because at the end of the day, I guess the business has a bit of buffer. So we kind of work that out the best we can to help them out too.
Yes, it was a bit confronting, because I suppose I prided myself, or at least at the time I thought I prided myself on the fact that I treat the business's money as my own. But it was a good and pretty early lesson that actually I could go a little bit harder from a business sense. Sounds a little bit wrong to be saying that, but that's the lesson I took out of it.
It's fascinating to hear that as well too. It's great, and thanks so much for sharing that. I also wanted to understand as well, when you said that those property, or that lots were selling for 600, well, not 600, but 600 square meters, and you saw those mums and dads doing that as well. Is that still quite common to see that happen? Because I mean, why would people buy the 600 square meter block initially, not to build on themselves, but to subdivide it?
So the nuance of the planning controls in that example were that you had to build the houses to subdivide. So because at Stockland at the time they weren't building any houses, the minimum lot size restricted us from going down to that 300 square meters. And that still happens. So there's still dual occupancies that get developed in the greenfield projects that we're working on, whereby because ClearState in my current world, we don't build. So someone could come along, a mum and dad could come along and buy the bigger lot, propose through the council process to build 2 dwellings and therefore subdivide that lot further.
Okay, gotcha.
It becomes about how, I suppose, any particular investor can manipulate the planning controls to their advantage.
Yeah. So is there any reason why ClearState has not really decided to go down the building path as well, construction path, but just selling blocks of land off?
Yeah, if you looked at our 10-year plan, it's certainly something we've got on there as an idea and something we'd like to be doing. At this point, we just want to be really good at what we know, and build up the business to a point where I suppose we've got the financial means and we've got the ability to go and try something different. So it's more about being really methodical in the way we implement our strategy, and getting really good at what we do, and to a certain size that allows us to go and branch off into other things. But I have a personal opinion that pure land subdividers in 10 or 15 or 20 years will probably be pretty rare, because the ability to sell a house and land is a much better customer experience than trying to do all of the pieces of the puzzle separately. So if you're a customer at the moment, you buy a piece of land off me and you sign a contract with me, you then go and find a builder, you sign a contract with them, you then go and find a financier and you sign a contract with them. If that was all more streamlined through one entity, that's a far better experience. And I think as a consequence of that, more people will be attracted to building a new home as opposed to buying an established house.
Yeah, and that makes absolute sense, because I mean, it's with anything. It doesn't have to be in property, but it could be just go and maybe buy an electronic device. If you're going to buy something that comes with all its accessories, you buy it all at one go. You don't want to be going to different multiple vendors to buy something. It just takes too much time. And it's the
Absolutely.
convenience.
Absolutely.
I guess
And
that's reasonable. Yeah.
that's happening in Melbourne a little bit already. I think the Melbourne market's a bit more mature in that sense than Sydney is. There's a few more, I suppose, builder developers, as I'd call them. So yeah, I think that's ultimately where we'll end up. So the building journey for us is going to be a long and slow one, but it's certainly on the radar.
Great. So let's talk a little bit more about, I guess, in terms of the property journey that you've taken on board. That was a very fascinating story. Actually, you're probably the first I've actually heard that you purchased your own block and then subdivide it and then you built on it and so forth like that. As your first property, most people just buy it and then build it and then live or whatever. And I'm pretty sure you've done quite a lot of transactions and property deals. Would you be able to share with us maybe perhaps one part of your journey where you've come across maybe one of your worst investing or development moments?
Yeah. Interesting question. So I think anyone who does development for a period of time will have a war story or two. I'm no different. The project that comes to mind is one where during my time at ClearState, we got a little bit swept up in the market hysteria that was happening a few years ago. We bought at the top of the market. We were guilty of probably not reading the tea leaves on what was actually happening in the market, and almost forecasting that growth was going to continue. It didn't. What felt like a week after we finalised that transaction, prices started to go down, demand started to fall, and in a 50-lot subdivision, once you lose the ability to sell at your feasibility price, your returns start to come under pressure. So basically, we bought at the top of the market. We were selling on the way down. Returns don't look as good as they were when we bought the project. There was a few unexpected things that came during the council approval process as well that didn't help returns. So we ended up, we made okay money out of it, but it certainly was nowhere near our expectation. And we had to do a lot of things on that project unconventionally to try and recover as much of that loss as we could.
And how long did that take, that particular process, to sell off all those lands to be able to, I guess, recoup your first initial investment, but also to, get through this challenging phase that you went through?
About 2 years longer than we originally anticipated.
Okay.
So we were doing things like to try and buy time for market recovery. We were renegotiating terms with the vendor. We were looking at whether we could get more yield out of the project. We were looking at trying to, I suppose, be a little bit creative in how we delivered the subdivision works with a civil partner. So it was almost any idea that we thought could save the project we were trying to implement, which was good because it taught us a lot about how we could be more efficient on some of our, I suppose, better performing projects. But that particular investment was, one I probably don't look back fondly on from a return perspective, but out of every war story, there's a lesson. We certainly learned some there.
Definitely. And was like the 50 lot subdivision something like the common things that you guys take on, those type of projects, or is that was a smaller development in comparison to the sizes that you usually take on?
Yeah, so we do anywhere from 20 to 200 lots is sort of our sweet spot, which will vary in terms of the ultimate size of the parcel we buy originally, depending on where you are and where you're developing and what the associated lot sizes are. But yeah, 50 is pretty typical for us.
Yeah, great. And on the flip side, I'm sure that you've had a lot of great successes during the time that you've been doing this type of development as well. Share with us one, maybe perhaps aha moment along your property journey as well.
I'll go back a fair while. It's maybe not an investing story per se, but when I was going through university, I knew I wanted to do property, but I didn't really know what area I wanted to specialise in or where I wanted to go. You could do many things in property, as you know, leasing, sales, real estate, or all of the above. And I did a property development, or there was a property development subject in my university degree, and the whole process or the whole learning experience, everything just seemed to make sense to me. It was the first time I'd learned about a feasibility and what makes up a feasibility and how you determine value of a development site. It was really intriguing to me. So that was probably my first aha moment where I said, okay, well now I want to do property and I want to do property development. So that gave me a lot of clarity from a career standpoint. From a investing in property perspective, probably no specific example, but when you're doing your own personal investing, the benefits of relationships is probably a broad lesson that I've learnt, whereby if you can use your network to your advantage, it can help the return that you'll ultimately get out of a project. And I suppose that's probably a mindset that I try and take into any investment, whether it be personal or professional, and that's paying dividends for me.
I think that's so true. It rings true for everything. I think in regards to any type of investments that we do, you got to surround yourself with the right team. You got to have your accountants, your solicitors, your lawyers, etc. Without them, we can't rely on that because it's such a big. There's so many cogs in the wheel, and we don't know everything. We're just able to just put the plans and everything together to be able to execute it. But when it comes to actually getting the details, we rely very heavily on the team, and that's so crucial as well. So what I'm also wondering as well is maybe just talk a little bit more about ClearState in terms of what you guys are currently doing. We've talked a bit of a high level overview of what type of blocks that you guys target, but from 20 to 200 kind of subdivisions and a lot. Maybe just share with the audience a little bit of the story behind, say, maybe one of your most recent transactions or purchases. It'd be interesting to see that process, just to explain to people how do you guys go about this acquisition, then all the way through to actually, selling the block of land where you subdivide it and so forth. That would be really interesting to actually share that kind of process. Yeah,
so maybe if I share one we've recently bought. So we committed to a 50 lot subdivision, which was acquired from three owners that own contiguous parcels. We committed to that back in April of this year. So if you cast your mind back to April, that was, I suppose, peak COVID uncertainty. There was peak uncertainty. We backed, I suppose, for that particular investment that the government would implement stimulus to the property industry, given how important it is to the overall economy's health. And we backed that if you've got good projects and good affordable product in good locations, ultimately we'll be able to develop them. Fortunately, that's turned out really well. So from the point where we committed to that project back in April, we've almost got our DA, which is really surprising. It is very fast, yeah. So we typically forecast a 12-month period for our DAs. So we're going to get that in circa 6, which is fantastic. And we've sold the project out. So I suppose if you look with the benefit of hindsight, if you had have said to me, we'd almost have our DA and we'd be sold the project within 6 months of acquisition, I would have laughed at you. So that's been really good. But in terms of the end-to-end process, once we've identified the site and we've done the deal with the vendor, we then go through a really detailed and strenuous due diligence process. We spend a lot of time and money at the front end really understanding a project before we formally commit to it and spend money. So we understand the ground conditions and any contamination that might exist. We understand the planning controls that we need to adhere to. We do a lot of market research to understand that the product we're going to deliver is market facing and what we can sell it for. So we do a really detailed feasibility that typically takes us 8 weeks to complete. And then once we've done that due diligence, we formally commit to the project contractually. And then the next day we're into preparing the DA package, preparing our go-to-market strategy, and getting ready to deliver the project. We'll typically have a 12-month option period once we've committed to the project, whereby we go and get the DA, we get pre-sales, we get project debt. So we fund some of our projects via project debt from a third party, and then we settle on the land. And once we've settled on the land, we're straight into construction. So we have all of that lined up, ready to go. So we settle on Monday, we start construction on Tuesday, and then from construction through to creation of the title that mum and dad ultimately settle on will take another 9 to 12 months.
Okay.
And then at the end of that, we get all the settlement proceeds in, and that's ultimately where we make our cash profit.
Yeah. So just to probably explain to the audience, construction, we're not talking about building houses, but it's basically laying the foundations of all the sewage, the plumbing, and all the electrical works, kind of stuff like that. So basically, you have all the roads, all the stuff there, just no houses on there.
That's right. Yeah. Think about picture a suburbia, if you like, just minus the house, and we get the suburb to that point, and then after that, the customer can come along and build the house that they'd ultimately want to live in.
Yeah. And this is the challenge that I think any land developer faces, is because to actually sell something that a land is hard to sort of picture in somebody's mind until you actually see it. And most people who like to, buy a brand new house can actually go in, feel it, touch it, and so forth. Is there a different way or that you guys would market and promote the land in order to actually attract the home buyer to be able to purchase that land? Because, for me, I'm like, how do I see what this house would look like on this land and in this suburb as well? And who's going to be around me? If I've got 50 odd lots out there, it's empty, then I'm imagining what's it going to look like when there's 50 odd other houses being built? Could they be exactly the same? Could they, all that? How do you market it in a way where it's like, selling that dream?
It's interesting. 10 years ago, I think that was probably more of a problem than it is today. And I think what we find nowadays is the customers are so educated when they come and talk to us. Very few customers have very little understanding of what they're potentially going to acquire. They've whether it be through family and friend experience, whether it be through market research, internet research, whether it be going to display villages and competing projects where you can actually walk around a house and touch and feel it and see what a typical lot size will look like. There's more opportunity for people to understand the process and what they're buying. One of the really important things is to try and get people on site. Now, you mightn't be able to see the lot that you're actually buying because it isn't under construction or it's mid-construction, but you can see the typical location of where your lot is. But it's selling off the plan from a land perspective is, I'd suggest, easier than it was once before.
Okay. And I guess for listeners out there, when they're looking at a purchase, say off the plan kind of land, stuff like that, is there any sort of incentive for them to purchase it at that? Is it because it's cheaper to build, like to buy land and build, or would it be cheaper to actually go and buy something in the local area? That's kind of the perception we haven't sort of understood.
Yeah, good question. So at the moment, there's a lot of government incentive for customers to buy and build new. So there's stamp duty exemptions, there's grants that they can get access to. So that, I suppose, is an advantage for buying a new product. The other advantage is you can build the house that you want. You can customize a house. You can choose the materials and colors that suit your taste and needs. You have complete control over that. So the ability to be able to personalise your family home is a really appealing one. So that's probably the other reason why it makes sense. And in some examples, like I touched on earlier, our projects are located near new infrastructure, like the Northwest Rail Link in the northwest of Sydney. So the ability to build your new home to your taste within walking distance of that infrastructure is pretty appealing.
Yeah, absolutely. And it's really, really important, because I think nowadays people rely very heavily on these infrastructures, especially to get them closer towards the CBD if they need to access or wherever they need to go. And it's made a huge improvement. I mean, I've been on the metro many times, and it's so fast now to just get from point A to point B. It's actually faster to hop on the metro to go from, say, Kellyville to Macquarie Park than to drive.
Yeah, absolutely.
I don't even know why I even drive them. It takes me an hour to drive to Macquarie when it only takes me 20 minutes on the metro. So
yeah. The other probably advantage that particularly first home buyers get out of buying new is because they're buying off the plan and they don't have to settle because the lot hasn't been created for circa 12 months. They've got another 12-month worth of saving time. So, for first home buyers particularly, that 12 months worth of the ability to save is really good when you actually ultimately get to the point where you need to take out your mortgage. You've got more of a deposit to tip into that transaction. So that time frame for a lot of our customers is really appealing.
Yeah, I can understand why as well. So let's take a step back on the vendor transactional acquisition side of things. You mentioned this particular example was a three vendors that you negotiate and you put them together in that site. How did you guys go about finding that kind of site? Because it's not, I mean, like, you really would have to do a lot of due diligence to be able to find three of them together. Like, one is fine, two maybe is not too bad, but three.
Yeah. So that particular example, it's on a street in Box Hill called Box Road, where we've done some projects before. So we knew the area really well. We like the location from a market perspective. We knew the planning controls really well. And that came about just via our network. So I suppose we've got a network that we reach out to when we're looking to acquire. An agent friend of ours knew one of these vendors, and I suppose that got the initial conversation started. And from there, the three vendors realised that they were better selling together. Their land was more valuable because it was more efficient to develop it as one parcel as opposed to three individual projects. And that allowed the conversation to become a lot easier because there was a realisation from a vendor perspective that they were going to maximise their outcome by partnering together. Yeah. So, and that happens a lot. Often in the fragmented land subdivision space, the one neighbour is reliant on another to maximise their value. So if they can join together and sell at the same time, they'll realise more value.
Totally. So I'm also wondering, like, in terms of those three lots, like, how large was that block of land when you actually merged them together?
It was 6.5 acres.
Ooh, that's quite a lot.
Yeah.
And once you actually subdivide, how much was each block in terms of sizing wise, once you've actually been able to subdivide it into, say, 50 lots?
Yeah, average of about 375 square metres.
Well, that's reasonable still. I mean, yeah, that 400, close to that 400. Yeah. And that means then people will be able to develop or build a house, like a double-story house, quite easily. Then with still a little bit of backyard space too.
That's right. That's right. So again, they've got their choice of builder, they've got their choice of design. They've got a lot of flexibility to come in and make it their own. So that appeals to a lot of people, and they go away and do that.
Yeah. So just curious as well, how much were those blocks selling for on average, like in this current market?
We started from 475,000 and ranged up to, for the bigger lots, near on 600,000.
Yeah, that's still very affordable then, actually, when you think about it, because by the time you build a house and stuff like that, it'd be close to buying almost a brand new house in the area, because around the Box Hill and Kellyville area, the prices are up to the mil mark. So
absolutely, yes.
Yeah. Oh, okay. So that really does make it very enticing to be able to build and brand new compared to actually going out and buying an existing one that doesn't have your taste and everything in it.
And in that particular project, within 3 kilometres of the metro. So not not a significant distance, which again was appealing to customers.
Yeah, now it makes sense. There's a no-brainer why those lots sold out so fast as well.
That's good. The government stimulus certainly helped. The government's done a great job from a property industry perspective managing the COVID situation.
Yeah. Okay. So, funding wise, this is something that's also really puzzling for a lot of investors out there. For a large project like this, how was funding, I guess, put together for a project like this? Because it's not something that's just like, yep, we'll go in and just purchase this up. How did you go about that process to be able to ensure that you could, negotiate, get the best price for the project to make it feasible?
Yeah, so that project hasn't gone to construction yet. So we'll typically take out the bank finance when at the point of construction. Up until that point, so say the first 12 months of a project's life cycle, we fund out of equity.
Yep.
And then once we've got the pre-sales in place, once we've got a DA and a construction contract with a civil contractor, that's the point where we go and take out bank debt.
Okay.
At the moment, there's a fair amount of players in that space, particularly non-bank lenders who are looking for well-placed projects that are pre-sold with good returns that they can go and put their money into. So our experience or recent experience in the debt market's been really positive.
And is that relating to, say, I think the financier you mentioned that's in New York is helping fund these type of projects, or is it a different type of private lending?
Yeah, no, that's part of our structure, if you like.
Yeah. Okay. Excellent. It's really fascinating because there's so much that's involved, and obviously with your experience, it's worked in Mirvac and Stockland. You can bring all this across to better manage these projects. One thing I think most of us will probably be thinking about is how do you make sure that you get these projects delivered on time? I mean, you've obviously delivered something like this much sooner than expected, as you said, but how do you ensure that things like this are delivered on time? Because there's so many parts of the wheel, and there's so many external factors like COVID, for example, that could have impacted this dramatically.
Yep. So due diligence is really crucial. So we need to have a really thorough understanding of the moving parts of your program to make sure you've got enough time to deliver on those moving parts. And a lot of it will come back to our ultimate strategy, whereby we buy land that's already zoned, that's very, very certain from a planning perspective. And then when we're looking at the products we're going to deliver, we try and get 100% compliance. So because we're not trying to push the boundaries with council, you limit the risk of your program from a DA perspective not being achieved. So really it's about having a really, really detailed and understood program at the point of acquisition. Doesn't necessarily mitigate all risk, but it certainly gives you a good chance of delivering on your project. Again, everyone's got a war story as it relates to projects that haven't gone to program. But it really comes down to the buying and how well you analyse the moving pieces of your program and forecast accordingly.
And I think we're sort of just talking about the council DA approvals and so forth that you've gone through. Now, say, for example, a customer comes and purchases this block of land and they want to build their dream house on it. They would need to submit a DA approval to get that done as well too. Do the lands also fit for CDC, like compliant development? Yeah.
So, I would, without being completely accurate, I'd suggest 95, if not higher, % of our product is CDC applicable.
Yeah. Okay.
So the customer can get a CDC approval on most of our projects within 10 days.
Yeah, well, that's why I also want to ask, is because people want things quickly, want it now, or even yesterday. And if it can be delivered, because they don't want to be waiting through council to get like 6 to 12 month approval to get their home built. As soon as they get the land, they want to get started straight away. So yeah, that's fascinating. Great. Well, I'd love to talk a little bit more about then mindset, just to sort of shift things around there. What's been the biggest why? What you're doing right now, what's your drive, what's your motivation behind what you're doing?
I think it's probably what I touched on earlier. It's the diversity that my job can deliver for me. I don't sit and look at a spreadsheet all day. Sometimes I can get out on site and kick the dirt. I do look at spreadsheets. I analyse markets. I deal with people. I negotiate with councils. It's so diverse that every day I come into the office or start work is going to be different to yesterday. And that keeps me, I suppose, interested. But the tangible nature of what we do is probably the biggest thing. The ability to take a project from the initial conversation with a vendor and doing a deal, through the DA process into construction, and ultimately seeing homeowners in their house with, and creating their lives is a really tangible thing. So that's pretty exciting.
It is very exciting. What about on a personal level? What do you think you want to do in the future, whether it be now or so forth in your own property investing journey? What are your sort of goals and dreams and aspirations? Because you've got a great skill set here. As you said, you've already done, your own personal developments as well too. What's your aspirations for those two?
Yeah, probably like to see ClearState grow into a bigger business, start to branch out into bigger projects, like we touched on earlier. Maybe in 5 or 10 years' time, be building some houses, and really doing that as well as we can. Delivering projects that make good returns to relevant shareholders, change the lives of our customers, and ultimately just become, I suppose, the best business we can be.
Great. Let's talk about mentors and I guess people who've helped you. You mentioned when you were working firstly at Mirvac, you had two great, bosses. One was put you in the deep end, and the other one who gave you lots of great coaching. Over time, you've probably experienced a lot during your time at Stockland for 10 years or so. Could you share with us some of the mentors that you had and what kind of fond memories you had with them that gave you those kind of great skills that you've learned now?
Yeah, I was fortunate to get exposure pretty early to, I suppose, a number of executives, particularly at Stockland, which was great because you learn a lot just observing those sorts of people who really know what they're doing. So I was very fortunate in that respect. I wouldn't say I had any mentors specifically. I probably just took little bits from everybody that I dealt with, whether it be the way they do things really well or maybe some of the things they weren't so good at and how I think they could have done it better. I was very, very fortunate that lots of people gave me some really good guidance along the way. One of the best things I did was I got exposure to a business coach, or a corporate coach, if you like, through some training that I did at Stockland. And I ended up spending some one-on-one time with him. And it was really quite powerful for him to, I suppose, analyse me and give me some feedback on what he was seeing and what I was telling him. That was probably the most, from a personal development standpoint, the most important thing I've done.
Can you share maybe just an example of one because it'd be a really great, I guess, example for the listeners to maybe reflect on as well too?
Yeah, he sort of drilled into me that I could sometimes be a little bit pessimistic, and particularly around my own personal performance, not so much about business, but my own personal performance. And he got me to, I suppose, look at the good things that I did, not just the negative things that I did. And for a period of time, he would every day get me to write down the good things out of my day and then the not so good things out of my day. And what that taught me was that when I was really realistic about what I was writing down on the page, I had more good things than I had bad things from a personal performance and how I analyze that perspective. So it allowed me to become more balanced and get more confidence in what I was doing. So he was great at giving me a structure to analyze myself, and that ultimately allowed me to become more confident.
Fantastic. That's what I love to hear, because I think a lot of investors also get inspired to do that. We do look at things realistically, but at the same time, it can be a detriment to always think about, what's the worst case, because you need to factor those things in as well. But,
Absolutely.
go look at the positives. And are you also using those skills in, your current situations now and what you've been doing?
I'm not doing it every day, but when I find that I'm becoming a little bit more pessimistic or I'm focusing on the negative, then I'll do it maybe for a week just to, I suppose, reset myself.
Yeah.
So it's not, I'll probably end up doing it once every quarter, I suppose, as an average. But it's I find it a really good structure to keep me balanced.
Yeah. Excellent. And just, I mean, I've been in the corporate environment for many, many years as well too, and there's, personal performance plans and those kind of things. Is that what you guys have structured to help you guys be accountable to what you do in your role as well?
We're probably fortunate that we're small enough that we sort of get interaction day to day across the business. There's only 8 or 9 of us, so we can sort of do it live, if you like. One of the things that I think we've found that's worked well for us is we spend more time now doing than planning. Whilst we do an element of planning, we're finding we're more successful just by getting in and doing, which has probably been a lesson that as a business we've been learning over the last couple of years. But at the moment, it seems to be working really well.
Yeah, it sounds like it's a great agile environment that you're moving across much faster because understandably, Mirvacs and the Stocklands and the Meritons, they've got thousands and thousands of employees there. So
Exactly.
there's a lot of corporate tape as well, getting up to the top to get approvals and so forth. So being
Yes.
able to move much faster, I think you've delivered outcomes much quicker as well too. As the company grows though, how do you actually maneuver through that? In your position as a general manager, how do you see, the company building to potentially lots and lots of employees as well?
Yeah. Ultimately, we'll have to become, I suppose, more structured in the way we do that sort of HR type stuff. I'm fortunate that the team I've got around me are really they're self-starters. They want to be the best they can be. They want the business to be the best it can be. So I'm fortunate in the people that I've got around me. And I suppose as we grow, if we can try and find like people, then that whole process becomes easier. But at the moment, we give people a lot of autonomy to go and do their job. And if you've got the right people, I find that works really well.
Excellent. All right, let's talk about resources. Is there any particular books or any maybe audio programs that you've listened to in the past that's helped you along your success in your journey?
I wouldn't say helped me. I mean, a book that I'm still fascinated by and still read every so often is The Ascent of Money by Niall Ferguson. It's one of those books where I find anyway, I have to read the page twice to understand what he's talking about. It's a very complex book on a whole bunch on the history of money and bond markets and share markets and the like. I find that is a really good book for me to read every so often, just to I suppose not get away from property, but certainly refresh my memory on things and learn some stuff.
Wow, that's the first time I've heard of that book. Is it a book that we can easily find online and just download it or purchase it?
I'd say so. He's done a DVD series as well, which was pretty good. But I find the book, you can take your time to really understand the concepts that he's putting forward and what the history of money looked like. So I found it really fascinating.
That's excellent. Oh, I'm really glad that you shared that because this is the first time I like hearing new books and resources because most of them are usually the usual ones, Think and Grow Rich, Rich Dad Poor Dad, all those kind of books. But this is fascinating that you've shared that. So thank you for that. I want to also maybe take a step back and find out a little bit more about maybe your history kind of things. If you had a chance to go back to yourself and 10 years ago and, got to see him and meet him, what do you think you would have said to him?
I would have said invest more earlier, whether that's property investment or investing on the share market. Be more investment focused with your personal money. I think that's probably the advice I'd give. And secondly, from a career perspective, probably what I touched on earlier, be more positive and confident. Probably the two things I'd say.
That's
and
great.
enjoy the journey is probably the third thing. Obviously, you've got to have fun as you do anything. So enjoy the journey.
Totally. Okay. And I know you've talked about it for 5 years, I guess, goal, already a little bit about for ClearState, but in terms of say maybe your 5-year, whether it be career progression or property investing, what do you foresee for yourself personally in the next, say, 5 years?
I probably don't think a lot about myself in a 5-year term, to be honest. I think about business in a 5-year term, but I suppose my logic or approach is that if the business does well, then everybody in the business will do well. And that then affords me, I suppose, more personal opportunities from an investing standpoint. I don't have a self-managed super fund. So that's probably one thing I am going to do in the next year or so, just to be able to go and be a bit more flexible with the super money that I've got. But outside of that, for me, it comes down to business success equals personal success. So that's where I focus most of my energies.
Love it, actually. That's the first time I've heard that too. That's great. And then finally, Steve, I guess you've achieved great things, a lot in your career within property development, within all these large, great companies and, with ClearState and so forth. How much do you think of your success has been due to your intelligence, your skill, hard work? And how much of it do you think has been because of luck?
Oh, good question. Good question. I think I'd like to think you make your own luck. whether it be via hard work or relationships, networks, and the like. But you also, in our game, particularly in the property space, we are a victim of the market. You can only influence the market so much. You can't control it. So it's probably a little bit of both. I'd like to think it's more skill than luck, but it's probably a bit of both.
Yeah, great. That's a fantastic feedback on that one. All right. Well, if the listeners want to get in contact with you in the future, maybe even just to check out what the projects you've got, learn a little bit more about the company and yourself, what's the best way they can connect with you?
Yeah, probably our website, clearstate.com.au. You could find my details on there, and yeah, feel free to reach out. We're always interested to meet new people and talk to new people and experience new things. So yeah, get in contact.
Fantastic. Well, once again, thank you so much, Steve, for coming onto the podcast. It's been a pleasure to have you on, and thank you so much for sharing your story.
Thank you very much for having me.